been 6 months since the last time I gave you guys an update on where HELOC rates are today. With mortgage rates spiking up to a peak of 7.5%, interest rates are now back on the minds of Wall Street, Main Street, as well as us real estate investors. So in this video, I'm going to share with you what the HELOC rates are currently, where I think they're heading, what I'm doing with my HELOC, and some tips for you guys on how to position yourself with your HELOC in the next coming months. Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate agent, investor, and builder here in Northern New Jersey. And if you get value out of this video after watching, please smash that like button down below and also consider subscribing. We are slowly building a tight-knit group, community here of like-minded real estate investors looking to build wealth in real estate, more specifically a lot of the time with home equity lines of credit. So if that interests you, definitely check out our previous videos and consider subscribing. Now onto the video. First, let's go over what a HELOC is and how the interest rates are calculated. I have made videos on both of these topics in the past. I'll put a link in the description box down below as well as up in the corner right now. So if you want a more in-depth and detailed take on what a HELOC is and how the interest rates are calculated, definitely check those out. But simply speaking, a HELOC, or a home equity line of credit, is a revolving credit line based on the equity of your home. So if your house is worth $500,000 and you owe on your mortgage about $300,000, that means you have $200,000 worth of equity in your home. Now, a HELOC lender will allow you to access that equity through said HELOC, but not all of it. They base that off of an LTV, which stands for loan to value. And on average, I would say most HELOC lenders offer about an 80 to 85% LTV. So how that's calculated would be you would take 80% of the appraised value of your home, which, as I said, would be, for instance, $500,000. 80% of that would be $400,000, and then you subtract your first mortgage of $300,000, which means that you would have a $100,000 balance on your home equity line of credit. So we went over how a balance is calculated, how they figure that out, but how is the interest rate calculated? So unlike a conventional mortgage, which is tied to mortgage-backed securities and the bond market, a HELOC is strictly tied to something that's called prime rate. And a prime rate, by definition, is basically the lowest interest rate that a commercial lender would lend to a borrower. Prime rate is strictly tied as well to the federal funds rate, and that's the interest rate that you kind of hear all the time on like CNBC and stuff. The Federal Reserve sets the federal funds rate every month when they meet. Actually, if you know the federal funds rate, you could figure out the prime rate just by adding 3 percentage points. This brings us to our main topic of this video today, and that is what are HELOC interest rates right now. So as of today, in September, early September 2023, the federal funds rate is currently set at 5.5%. That means that the prime rate is 3 percentage points higher, bringing it to 8.5%. Now, that does not mean that your HELOC is going to have an 8.5% interest rate. Most HELOC lenders, really almost all of them, have something that's called a margin or a spread. And this is basically the difference between the prime rate and what they are charging you. This spread, this margin, is going to differ greatly for all of us. It's going to depend on your credit history, on your income, as well as how much equity you want access to through your HELOC. For instance, my spread, my margin on my home equity line of credit is 1.04%. So if the current prime rate is 8.5%, that means that my current HELOC interest rate as of September 2023 is 9.54%. That is almost a full percentage point higher since 6 months ago, the last time I gave you one of these videos sharing an update on where HELOC rates are. And it's really almost triple of where it was this time last year when it was coming in at 3.6%. You may be asking yourself where the federal funds rate and HELOC rates are trending from here. Being in real estate every day, I hear everyone out there consistently opining about where they think the mortgage rates are going to go. Frankly, I think this is a sucker's game because no one truly knows, and it's very volatile. It changes by the day. Nobody truly knows. And to be honest, nobody truly knows where the federal funds rate is going to go either. But I think it is a little bit easier to forecast where the federal funds rate is going to go, and here's why. As I said previously, HELOC interest rates are set directly to prime rate, which is set directly to the federal funds rate, and that is set every single month, more or less, by the Federal Reserve when they meet. So first, they don't change every day like a conventional mortgage rate. They can only change once per month. And the Federal Reserve board members and things like that are out there consistently talking, and you can kind of gauge most of the time where their head is at and what their plan is in the near future. So based on this, there are many prediction calculators out there that give you a probability percentage-wise on what they think the Federal Reserve is going to decide to do in the next meeting and the next meeting and the next meeting. And obviously, the longer time frame it goes out, the less predictable or the less accurate these predictions are going to be. But it still gives you a great idea and a much more accurate forecast of where the federal funds rate is going to go than when compared to some of these forecasts of where mortgage rates are going to go. The bottom line is, in my opinion, the federal funds rate is way easier to predict than the mortgage rates. For instance, as of right now, the CME Fed Watch tool gives you a 93% chance that the Fed is going to decide to keep rates the same at their next meeting on September 20th, with a 7% chance of them increasing the interest rates or the federal funds rate by a quarter point. Then for the next meeting, November 1st, they're showing a 49% chance that they're going to keep interest rates the same, with a 51% chance that they're going to raise interest rates. The next meeting, December 13th, 2023, shows about the same probability, and so on. So as I said earlier, as the time frame gets longer or further along, the predictability and the accuracy of these predictions may get less accurate, but it still gives you a great idea of not only what's going to happen at the next meeting, but at least the next couple meetings. That way you can plan what you're doing with your HELOC, whether you're holding a balance or whether you're planning on using it for something in the next few months. I find that this factor of a home equity line of credit gives some pretty good stability and predictability if you are going to plan on holding a balance. So based on this, what am I doing with my HELOC, my home equity line of credit? If you didn't already know, I took out basically my full balance at the beginning of this year in January of almost $175,000 in order to acquire a property that we were going to build a new construction duplex on. Now, the rate on my home equity line of credit was only about 5.3% back in January, and now it's almost double that. So that has changed my decision-making going forward. And actually, a few months ago, I did decide to start paying off and paying down my HELOC balance. I made a video about that specifically, sharing you my reasons why I came to that decision. If you'd like to learn more about it, definitely check the link in the description box down below, as well as up in the corner right now. So within the last 3 months, I've actually paid off over 50% of my HELOC balance, and I do plan on continuing to pay off that balance slowly as I get closer to project completion of this new construction duplex, which should be about spring of next year, 2024. This is a great example as to why you should never take money out of your HELOC if you don't have a way to pay it back. I only took money out of my HELOC in order to partially fund the acquisition of this property because I had most of my money at the time, most of my investment was in the US stock market, and I didn't want to sell when it was a little bit weak at the time. But I knew full and well that worst case scenario, I did have more than enough money in the stock market to pay off my HELOC balance. And that's basically how I've been paying down my HELOC balance. I take a little bit has come from my income, and a little bit has come from selling off some stocks that I've had that have recuperated or recovered a little bit since the beginning of this year. So based on this information, what should you do with your HELOC? So based on the CME calculator, it basically looks like we're going to be looking at about the same or slightly higher interest rates with the federal funds rate and on our HELOCs until basically about May or June of next year, 2024. But remember, these are just predictions. They're not guaranteed. So always base your calculations when you're looking to invest your HELOC in something, base it on worst case scenario, because just because it says that interest rates will start coming down in April or May of next year does not mean that's actually going to happen. The interest rates could stay the same or even get higher for years to come. So keep that in mind. That being said, if you currently have a large balance outstanding on your HELOC, you may want to reassess your HELOC strategy in the next few months, depending on what you're using that money for. For instance, if you used the HELOC money and you have a balance and you took it to, let's say, fund a fix and flip real estate project or something like what I did, basically a new construction project, you could just honestly keep the balance where it is and suck it up and pay the interest until you sell the property and pay it all off. Or if you have the means, you could do what I did and slowly pay it down as time goes on in order to save on the interest. Now, if you use your HELOC, let's say, as a down payment on a long-term buy and hold investment property, and this interest rate being at 10% is eating away at your cash flow, you may want to start looking at longer term loan products with a fixed rate, not a variable rate like a HELOC, in order to save some of that cash flow and give you some predictability each month. You could do a refinance, or you could even lock in your HELOC rate and stop it from going up even further. I've always said in all of my videos that a set interest rate is always better for longer term real estate investments because it gives you a set amount that you know you have to pay, a set cost every single month, instead of something where you have a variable interest rate. If you start using the HELOC when it was at 3 or 4% and now it's 10%, all of a sudden it's costing you way more per month, and there goes all of your cash flow. And sometimes even you're coming out of your own pocket for the right to keep the property. And that is a no good situation. Lastly, if you used your HELOC to maybe consolidate debt, like credit card debt and things like that, maybe the 10% that you're paying on your HELOC is still way less than you would be paying if it was a credit card balance. And you may just want to leave it as it is and obviously consistently pay off both interest and principal at a set amount every single month until you get all that consumer debt free and clear, wiped off. That is it for today, guys. Thank you so much for watching. Let me know in the comment section what you think about where HELOC interest rates and where the federal funds rate is going to go from here. Also, let me know if you have a balance on your HELOC, what you're doing to plan for the next 6 months to a year, as we think that maybe the interest rates are going to slightly tick higher and then come down. Or just let me know what you think where this market's going, because I mean, things change what seems like daily, and I would love to hear your guys' perspective on where you think interest rates and the economy and the real estate market is going from here. Other than that, I appreciate you tuning in, and I will see you next time.